Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 4th of July. All right, US holiday today. So another quiet day sort of on the global markets, but we do have some major activity today, and it revolves around the Aussie dollar with the RBA interest rate decision today. Now, just a bit of a recap. The ISM data from Monday, okay, missed the mark once again, right? We had the PCE price index numbers on Friday, which missed the mark. These numbers missed the mark. There hasn't been much change in the Fed and the outlook for the Fed's next or rate hike this month, but the forward guidance, the interest rate hikes down the track, will start to get sort of pushed out a bit, because you know what? The data is suggesting that the interest rate hikes are really starting to impact. Not enough to stop this month's interest rate hike, but definitely the ones down the track. Now, let's just have a look at the numbers here too, because they're pretty significant. And the ISM manufacturing numbers, pretty significant numbers. These were outside or right on the edge of the ranges. Okay, construction spending a little bit higher, but well within the current range. And that gives us a bit of a negative picture there for manufacturing in the US. Now, if I just come across to the charts, I just want to give you a look here. Excuse me. So as I just said, the PCE price index, inflation number, the ISM manufacturing numbers, you get the dollar index here, just looking at the global markets, and we're starting to see the dollar just start to trade sort of range bound, not really going anywhere, right? If we had stronger numbers, you'd start to see a bit of an uptrend, or weak numbers downtrend. At the moment, it's up, down, up, down. Now, that's not great for us because it just creates a little bit of uncertainty in the markets. And we are seeing that across a number of different pairs. Bit of an unwind of this sort of gold safe haven trade. It is still in a downtrend, but coming back and tested that trend line at 1930 perfectly. Oil is just drifting sideways as well now, okay, around $70. The US equity markets like what they see, and they are continuing to trend higher. The AI stocks, definitely driving the NASDAQ higher, and we are starting to see a bit of a home there for the Bitcoin around 30,000. So that's the global markets. Now, when we come back in and have a look at the currency markets, it's obviously a similar picture, right? Euro, well, we've heard from the ECB, we heard from the Fed, we heard from the Bank of England all last week about what they plan to do about interest rate hikes. But at the moment, the data doesn't match up with what they're saying. If anything, we saw that little surprise knee-jerk reaction on dollar yen. Okay, you're going to see this continually as it pushes up towards 145. Okay, the Japanese officials have already told us they're on yen watch. Now, are they going to go or not? To me, we need an event for them to kick them into gear, right? Extreme yen weakness up around 145.5, 146, maybe 147, and then you see it come crashing down, or major dollar weakness, and they'll jump on the back of that. So anyway, it's something to watch out for, definitely during the Asian session. Now, dollar Swiss, like euro, just drifting sideways. Dollar CAD, okay, it has come back a bit. We've got this new sort of formation up here of resistance around 132.80. But as long as oil doesn't do anything dramatic, it probably sticks around that level for the moment. Sterling, sort of likewise, found a bit of a base around 127. Kiwi coming back, rallying back after those weak US numbers to 61.60. Now, last but not least, the Aussie dollar. Now, I've left this till last because this is where the action will be today. But it's by no stretch an easy read in the market. Now, if I just come across and bring the calendar across, 0.25% is factored in, right? A 0.25% hike. Now, it's a line ball decision. I was reading some articles yesterday around the respondents who put in their numbers here. It's evenly balanced. I think 16 are for a hike, 15 were saying there would be no hike, right? So it's a line ball decision. Now, 0.25% has been factored in. So if they don't raise rates, we should get a knee-jerk reaction to the downside. But it's really going to revolve around the statement. And I've got the previous statement here just to give you a bit of a heads up. And I mean, it's the same old thing for the last 30 years, right? So there's no difference here. They're just trying to ensure inflation returns back to their target. Now, their target is a band between 2 and 3%. Maybe that's unrealistic. It's not for me to judge at this point, but the numbers did correct from 6.8 to 5.6% in inflation terms, but it's still well above their target, right? So, or their objective. So we may see a hike, but if they do hike, I'd say it's one and done. And what I mean by that is they will hike rates, and then in their statement, they'll come out very aggressively, or clearly, I should say, not aggressively, and say, you know what, we need to wait and see from here. Inflation's already dropped dramatically. This one here is to make sure it keeps coming off, and then we go from there. We're seeing it across all the central banks, so don't be surprised when we do see this. Now, outside this Aussie data, okay, we do have some German trade figures. You know what? In the big scheme of things, they're not massively important. And then the rest of the day, don't forget, we've got the US holiday. So the European session will be very quiet. When I worked in London for Citibank for 5 years, on those big US holidays, all the traders used to take a bit of a day off for the most of the team. It was a day where they used to catch up on days in lieu. So I don't expect much out of Europe unless we see some crazy left field event, and that should hopefully direct us. So really, the focus is on the Aussie dollar. Now, just on a bit more depth to that, okay, if I come over here to the Aussie charts, okay, the Aussie is starting to make a comeback with this rate hike anticipated. Euro Aussie sort of just turning down. Sterling Aussie also. Aussie's bouncing back against the CAD, then also against the Swiss. And we saw a bit of a down move in Aussie yen last week. It's now sort of kicking back to the top side as well. And no surprise, Aussie Kiwi sort of just jamming away sideways. So to me, the Aussie, well, it's just a correction from the massive amount of weakness we saw against the crosses in the last week or so. A rate hike plus an aggressive tone, like called a hawkish tone, would see the Aussie crosses correct. Okay, probably half of what they did last week. So I can't see the RBA coming out there and go, you know what, we're raising rates and we're going to do it again like the Fed's been doing. But, you know, stranger things have happened. If anything, I've been out of luck or out of tune with the recent moves by some of the central banks. What do I think as far as the hike, no hike? Well, I think the inflation numbers were significant enough to stop them. Okay, so maybe no hike, but you know what? If they go hike and that's it for now, it's like a quick 1-2 where we see a knee-jerk reaction to top side and Aussie comes off. So this is not like a CPI release where you have a very clear opportunity to go long or short. There's a bit of ambiguity, and that revolves around the central bank's potential impact here with their statement, and then potentially a bit of a Q&A afterwards, right? So not as easy as it looks, but the Aussie is on solid footing at the moment. I'd say, you know what, just leaning on the what's been factored in, which is the rate hike, right? These are all moving because of the interest rate differential shift. If they don't hike, well, I think we'll see that corrected at the very least, and you might see say Euro Aussie go back up to where it was, 165 sort of 15. Sterling Aussie back up, Euro CAD back down, and Aussie Swiss down, maybe Aussie yen back down as well, and a little bit of correction to the downside in Aussie Kiwi. So that's where it is, because that's been factored in. That's where the potential unwind will come, but it's not massive by any stretch. You know what? The markets will really connect on Wednesday when the North American session starts for the week. Outside of that, just keep an eye on this RBA decision. As I said, it can be a bit of a calamity because it's not exactly sure. We're not going to get a rate hike plus a hawkish statement. That seems a bit out of reach at the moment. So when you are looking at the markets, come back and the easiest thing I like to do is come back and sort of see what's going on across the board. And what I mean by that is have a look what's going on with the US equity futures. At the moment, they're slightly down. Are we seeing that across the board on the majors? No, we're not. Okay, so we don't have sort of great market conditions there. And that's what you would expect with the major US holiday. The Aussie, okay, well, it is outperforming against all the other crosses. So that's what I mean. If we get no rate hike and then even say a neutral to dovish statement, well, then we're going to see the Aussie come off. But that's a bit of a stretch as well. What the central bank is trying to do is just slow people down, slow them from spending. And otherwise, they'll be sort of trying to scare the market. Go, if you don't stop spending, we're going to raise interest rates again, right? It's as simple as that. But that's where we are. Don't forget the Yen Watch. Tell you what, this is actually may seem a bit weird, but a US holiday where liquidity is a little bit thinner than usual. I tell you what, the BOJ would get really serious bang for their buck. That's one of the key opportunities, excuse me, that I would be sort of looking for, because the Bank of Japan needs to time this carefully. If the North American market is shut, I tell you what, they're going to get a lot of movement and a lot of noise, and that's what they want at this point. So to me, just keep an eye on that as we go through this yen session. It could be on the cards. All right, guys, that's it from me. Have a good trade session already. Okay, bye for now.